What's going on YouTube? It's Infinity Ian back again for another video. So I wanted to go over a market breakdown in this video and kind of just go over like what's going on with the market and show what could potentially happen, whether it goes up or down, and like just break down pretty much the situation that is occurring within the market. We're at a really weird time. We're at a really weird time in the market because there's like the stuff going on with the Trump tariffs and like the trade wars going on, and we're also at a high, like near the all-time highs. So the market could really do anything right now, man. It could really do anything. But I kind of want to just break down a couple potential scenarios that I'm looking at trading and like waiting for and waiting to react to whenever I see these scenarios play out, whichever one does play out. I don't know which one is going to, right? Like I'm not a fortune teller. I can't tell the future, but I'm going to be prepared for whichever one does play out. So let me break down what I'm looking for in the market and what I'm looking for the Dow to do for the next, week, couple weeks, potentially couple few months. Let's just see what could potentially play out. So let me hop on a trading view and show you what's going on with the Dow. Right there. I like the way you do it right there. I'm gonna make it to stir. I'm sorry, y'all. I'm sorry. It's Saturday, and yeah, I'm just excited for it to be the weekend because it was a long week. Long week, and I'm going to show you why it was a long week in this video. So let me break down what's going on. So this is currently the hourly chart of the Dow Jones. I'm going to start at the daily, actually. We'll start there. So this is the daily chart of what's been going on with the Dow Jones. Whenever I talk about the US 30 or whenever I talk about the Dow, I'm talking about the Dow Jones Industrial Average, right? Mostly when people talk about the market, they're either talking about the S&P 500, the NASDAQ, or the Dow Jones. But normally whenever I talk about the market, I'm normally referring to the Dow Jones. And this is what is occurring on the Dow Jones, right? So this is showing from the beginning of 2024 until now, right? So just over a year of price action. Every single one of these candles equals 1 day, is equivalent to 1 day of price action. The white candles are like the bullish candles, the candles that when price was going up, and the black candles are the bearish candle, and that's when price was going down. So you can see how, we're constantly just going up and down, up and down, up and down. And then there's like swings up and swings down. And you can call this the market cycle because there's like different phases that the market acts within on any time frame. It doesn't matter whether it's the daily time frame or the 4-hour time frame or the hourly time frame or the 30-minute time frame or the 15-minute time frame or the 5-minute time frame. These are all the time frames I'm like looking at throughout the week and the weekly time frame as well. But these are all the time frames that I'm looking at throughout, whenever I'm trading. But this is my normal trading setup, the 5-minute time frame right here, the hourly time frame, and the daily time frame. So I want to get into why I said this is kind of a really weird time and why it's a crucial time in the market, because just look what's been going on. So this down here, right, this October 27th and October 30th, like that time frame was the low of the market for the last couple of years, right? Ever since then, we've just been going pretty much straight up, right? Like you can draw this trend line from here. We've just been going straight up. I mean, it's been in a channel, it's been in an upwards channel, but it's been pretty much you know what I mean? Like we're going straight up. And let me show you how big that move has been. It has been 12,732 points, right? Almost 40% up, right? In one direction. And it's been 467 days, right? 335 trading days, but 467 days. So close to a year and a half, right? Of going relatively straight up. That's pretty insane. That's really, really insane. Because let me show you why. Like look at the past price action, right? This is what we call trading range price action, where price is just going boom, boom, up and down, but it's not really making very convincing highs, right? Yes, this broke above here and this was a high. So this created a higher high than this high, but it was an instant rejection afterwards and we went lower. We begin to go lower and then we go up and we eventually break this high, right? Over here, we broke that high, but we did not really convincingly break it. It was just like a little, just a tip, and then came right back down, right? So at this point, price was trading within this trading range, right? It was trading from this high to this low, and price was not really convincingly breaking above this area. I'm going to draw a line so you can see. It was not really convincingly breaking above this high. And look, attempt to break above, rejection right back underneath it. Attempt to break above, rejection right back down underneath, right? So there was a lot of downward pressure up in this area. There was a lot of resistance up in this area for a long time. For what? This was August 16, 2022. This was July 12th, 2023. So almost a year of like not being able to blast convincingly above this area. And then we do get a little bit of a blast above, and we end up going lower, right? I want you to see that this right here, this is like a trading range triangle formation, right? So I want you to see that this is a triangle. You can see right here, like this is a upwards ascending triangle, kind of like that, right? So price was trying to figure out, do I want to continue up or do I want to kind of flat out, stagnate, and then go lower? And initially it did flatten out, stagnate, and go lower, but it bounced and ended up going up higher. But I want you to pay attention to where price ended up bouncing on both of these areas, right? I'm gonna get rid of this for right now. So I want you to pay attention to, I'm gonna get rid of this line too. I want you to pay attention to this. This is the Fibonacci retracement tool that I normally use on every sort of trade that I use. Like, I'm constantly looking at this tool. And the reason why I'm constantly looking at this tool is because when you find a low and a high, when you are able to find around the 50% zone of that low and that high, right? This is the low and this is the high. This blue line indicates a 50% retracement zone. Look where price ended up bouncing off of, and it stalled out at the 50% retracement zone, right? From this low and this high, this blue line was a 50% retracement zone. So we went, it took us a while to get there. It took us from December 13th all the way to like March, the middle of March, to be able to get to that 50% retracement zone. But after that zone was hit, what did we end up doing? We ended up just stalling out and then bouncing off of it, right? 50% retracement zones are so important on any time frame. It doesn't matter. It does not matter. Pick a low and pick a high. Look at the 50% retracement area of that low and that high. There is a very, very good chance price is going to have some type of reaction at that area. Exactly what occurred here. So you see how price bounces off this 50% retracement zone, right? We end up going higher and we end up making a higher high here, right? This high is higher than this high, right? And we ended up making a higher low because this low here, after that high had occurred, we went and the 50% retracement bounce, right, was a low. This low was higher than this low, right? So we're showing that we are already trying to go higher, right? The lows are getting higher and the highs are getting higher. We already are showing that long term we want to go higher. So eventually we do get a higher high. So watch this. I'm gonna move that up to there. Boom. So now this is the range that we're going off of. This low and this high. Watch where price bounce on October 27th of 2023. Look where price bounced off of and started going higher from that point. The 50% retracement zone. I'm telling you, you have to pay attention to the 50% retracement zones on anything. So I'm gonna get rid of this, but that brings us to the move that's been occurring ever since then, right? We've just been channeling up ever since that point, ever since the late October 2023, we've just been channeling up. Yes, there have been dips, but ultimately we've been channeling up. And I'm gonna show you market cycle wise. I normally have, this had disappeared, but I just added this back. But this is the market cycle that the market is always in one of these 4 phases of the market cycle at any point in time on any chart, right? I'm gonna show you the phases on this chart. On this example, we're gonna start actually at number 4 because this is what led to the breakout that we've had ever since October, late October. So we start with the trading range, right? Price in a trading range is just going, it's just ranging in from the lows to the highs. It's just staying within a specific range. It's not really going higher convincingly or going lower. It's just trading within that range. That's a trading range. But eventually a trading range gets broken. When that trading range gets broken, that indicates the beginning of a new market cycle. And that first phase is the breakout phase, right? This right here, breakout phase. I'm gonna draw a line so that you can see where the breakout was. This is the high that we're gonna be basing off of. So this was November 30th, 2023, right? In a month, price had blasted up over 3,400 points. That's crazy. But it blasted up over 3,400 points in that month, right? And it had been dropping 3,400 points ever since July 27th of 2023, right? So it took 66 bars or 92 days, 66 trading days or 92 calendar days to get to that point. And then we ended up blasting higher, and it only took 30 days or 34, I should say, 34 days to get to this point, right? Or 24 bars to get to this point. Same distance though, right? Same distance up and down. It was just a much shorter time frame. But up until this point, up until that point in the market, this was the all-time high. This July 27th to 2023 was the all-time high. Then we broke it. This is now at this point, like, because all this hadn't happened yet. If we're looking at just that day, this is now an all-time high. So we are now in phase 1 of the market cycle. We have now broken past phase 4 and we're now in phase 1. So we are at the breakout phase. So the breakout just keeps going up higher, 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 higher. And eventually we end up stalling out. So this right here is where we ended up stalling out because we ended up breaking a minor low. You see how like throughout this move, let me go a little closer so that you can see exactly what I'm talking about. You see how throughout this move, there's just so many bull candles. Bull candles are when price is going up, and there were the white candles. Look how many white candles there are compared to black candles or bear candles when the price is going down. Price is just constantly going up. Right? For the longest time, it was just constantly going up. There was stalling out, but it really wasn't going lower. Because pay attention to the lows. After like these are small pullbacks, right? This is a small pullback, but this ultimate low is higher than this low, right? Higher low. So price is showing you I want to go higher. Going lower, this is a low, but this low is higher than this low. Want to go higher, right? This is a low, but this low is higher than this low. Want to go higher. And these aren't even major lows. These are all minor lows. This would be the major low. It's just minor low that gets higher and higher and higher and higher and higher, right? This is a minor low. 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 These are all minor lows. But eventually, a minor low gets broken. And when a minor low gets broken, which was this area right here, this was a minor low because there was a lot of support and price action was just stagnating in this area for a while. And then we ended up going lower after that area. So this was like the beginning of the pullback phase, right? The phase 2 of the market cycle where we begin to go down, right? We're going down from that high, from this high up here. On this pullback phase though, look what happened. We ended up bouncing off of this low, right? This was the ultimate low of the pullback. We ended up bouncing off of here. We did not go lower than this point. So I'm gonna put a line there so that you can see. Boom. We did not go lower than that point. So that low acted as support for price to bounce off of. And this low ended up being a bull candle, right? So this was a reversal. Even though it was a low, it was a reversal to the resumption of the continuation of a bull trend. So this would indicate the beginning of the third phase of the market cycle, since the pullback is over, because that was the second phase. Now we're on the third phase, which is the channeling phase of the market cycle. And a channel is when price is going in one direction, whether it's up or whether it's down, right? But it's just bouncing within the range of the channel. A channel is a diagonal trading range, right? A trading range is when price is just bouncing in a range like this, stagnating. A channel is when price is bouncing in a range and it's going like this, bouncing up or bouncing down.